Welcome to the Lend Academy podcast, episode number 61. This is your host, Peter Renton, founder of Lend Academy. Every industry needs an ecosystem that includes companies like software providers. And our industry is obviously no exception to that. And really the first and the leading software provider to the marketplace lending industry is cloud lending. So today I am delighted to welcome Snehal Fulzele, who is the CEO and co-founder of Cloud Lending. Now, I've known these guys since pretty much when they got started, because software is such an important piece, and when it's one of the things that new entrepreneurs really want to find out about when they start their platforms. So we talk about a little bit of the offerings of what Cloud Lending provides. We delve into a little bit of a case study. We talk about whether companies should buy or build, and who really is their market and where they see their company going. I hope you enjoy the show. Welcome to the podcast, Snehal.
My pleasure. Thanks, Peter, for inviting me.
Okay, well, let's get started by giving the listeners a little bit of background about yourself and how you came to start Cloud Lending.
Sure. There's a bit of a context and a story, and some of you might find interesting as well. I and my co-founder and the current CTO of the company, his name is Darpan Saini. We met as roommates in 2008 at Carnegie Mellon, where we were studying computer science as graduate students. After we graduated, we actually started a non-profit organization to serve women entrepreneurs in rural India. The name of the non-profit organization was $30 Finance. And the reason why we started was, I personally grew up in a small town in India where I had seen microfinance in action. In small villages across India, women come together and they pool money to start business to help their families. Almost sort of similar to marketplace lending, but at a very rural stages, right? Intrigued by the impact these women were making, we actually created an online lending platform to bring together investors and borrowers. We operated this peer-to-peer microfinancing portal for 2 years. We actually saw a 99% of repayment rate in those 2 years that $30 Finance was operated.
Wow.
This was in 2010, 2011. That was our first sort of introduction to any sort of peer-to-peer framework. And we discontinued the operation because we had hit some regulatory issues with Indian government and so on and so forth. I won't go into the details, but that was in 2010, 2011. During that time, I was actually working at Oracle as an engineer in their financial services group, creating banking technology. And interestingly enough, during the same time, I decided to apply for my first credit card. Nothing too fancy, nothing too excessive, just $1,000 worth of credit line. I applied at one large bank, then another, and then another. I was rejected all 3 times. It was, how could this be? I was like, it's an interesting puzzle. After 2008, I figured out, after 2008 financial meltdown, the risk appetite of big banks just died. They weren't lending to consumers. They weren't lending to small businesses, unless you have the highest FICO score. I had entered the country only in 2008, 2009, had not had a credit card before. I had only 1 year worth of income. So, but still, I thought, given my education from a tier 1 university and a present employer, a lender would see me as an opportunity. But quite clearly, they did not. Now,
right. I had a similar experience when I first arrived in the US, and this was back in the 90s, so didn't have the same details about the financial crisis and everyone but I think it's hard. It's really hard to get into the system. Even though I was from Australia and I was in the system there, and I had, credit card offers all over the place. But as a relatively new resident, it's harder. And particularly, I think after 2008, 2009, it became a lot harder. I've heard that from many people who were just sort of professional people who couldn't get a loan, couldn't get a credit card because they just didn't have a long enough residence history. Anyway, so go on.
No, absolutely. The thin file problem. And
yes.
That's what, SoFi tackled and recently raised $1 billion on their amazing business model. Such a great story, huh?
Mm-hmm.
Anyways, now this really intrigued me and led, Darpan, my co-founder, and I to start researching what alternatives are there to big banks, right? We knew that having access to loans is such an integral part of everyone's lives, right? It's like a basic human right now. Now, if the banks weren't meeting that need, we knew someone must be. We learned, that was the time we learned about alternate finance market, and specifically about companies such as Lending Club and Prosper. As we continued our research, we learned that these organizations were building their own technology backends. This is when we knew that there is a market opportunity. We sensed a market opportunity, and we understood from our banking experience while working with Oracle, and also our microfinance experience working with $100 Finance, that there will be a growing need for alternate finance and the technology to drive it. And especially with the rise of big data, social media, analytics, and mobile technology, there was an opportunity to determine creditworthiness of a borrower outside of traditional FICO scores. Now, these market trends were they were really raw at that point in time. We're talking about 2012, but we sort of anticipated that this is going to sort of almost enter mainstream in over the next 3 to 4 years, and which we are actually seeing that now. And at that time, it meant that alternate finance companies were only going to grow. They've probably enter new asset types, newer markets, and we were really, really excited. But more specifically excited because there was no technology platform available for companies like these.
Right.
And that was the reason, and that was precisely why we started Cloud Lending Solutions, and it was born then.
Yep, and I know from my perspective, I mean, having been following this industry for a long time, I used to get emails from people. This is back in, occasionally back in even 2011, 2012, will say, hey, if I want to start one of these things, what software is out there for me? And that's, I used to have to say, well, there really isn't much of anything. But, obviously it was clear to me that there was a demand. And when you guys came along, it was, I think your timing was right, because there's enough demand that, if you were a little earlier, you would have struggled to really create a business. But anyway, I want to make it clear exactly what does cloud lending do, and can you just run us through, what your company is all about?
Sure. So cloud lending is a cloud-based technology platform. It is industry's leading cloud-based end-to-end lending solution, built natively on Salesforce.com. To be more specific, it digitizes and automates entire life cycle of a loan, right from origination through decisioning, underwriting, servicing, and collection. If I were to draw a parallel, I mean, what Fiserv is to banks today, cloud lending is to alternate finance companies. We typically form their back office infrastructure, and we automate, like I said, the entire life cycle of a loan. Now, Fiserv of the world were created from ground up for banks. On the other hand, cloud lending solution was created by keeping in mind the needs of the next generation of lenders, marketplace platforms and online lending companies. So today, our clients include banks as well as non-banks. It includes traditional finance companies as well as, and in fact, that was our beachhead market, which is online lending companies and the marketplace platforms.
Right. Now, I want to dig into that for a little bit here. And I know that one of your product offerings is CL Marketplace. Can you kind of just give us some details about that particular product?
Sure, will very well do so. So I already mentioned that how we support and automate entire life cycle of a loan. Now, marketplace lending is a unique phenomena, right? I mean, it brought in a new asset type in the market where investor can specifically choose notes originated by the platform, and that too they can choose to just buy part of that note, right? I mean, so there is this. It creates an additional level of complexity where each loan is being participated by multiple investors and probably likely going to get, different interest rates.
Right.
So now CL Marketplace is one of the applications in our suite of products. Now that takes care of this complexity of fractionalizing a loan, managing customer and trust bank accounts for the platform, moving funds between these bank accounts, eventually funding the borrower's account and then start servicing the loan. And during servicing the loan, again, the added complexity being the payout needs to go to investor based on the interest rate on the notes. And also in the process, it allows, meaning the marketplace module allows investors to view their portfolio in real time.
Okay, so you have a marketplace lending platform. You can set it up so it's for, you've got a user facing interface where that basically they can log in and see their portfolio, and that's what you're actually providing. Part of what you're providing with CL Marketplace, is that correct?
Yeah, I mean, it's noteworthy to mention that we are actually the back office data layer, so we don't do the web skin.
Okay.
So typically our customers, they want to own how the presentation layer looks.
Sure.
And they will connect to our back office, meaning the CL platform, using APIs.
Right.
Yeah.
Right. Okay. So then I know you've got other modules, and I'm curious about a couple of things you said earlier. You said you also have, banks and traditional lenders. What are they using your platform? What products are they using?
So banks, actually, they present our biggest market opportunity today. So what's happening is the alternate finance companies of the world, likes of Lending Club, OnDeck, and Funding Circle, they have shown, or perhaps the biggest and the most important innovation that they brought into this industry is a superior borrower experience.
Mm-hmm.
Now, banks, they really struggle simply because they're carrying a legacy baggage and they're relying on legacy systems that were built in 80s, 90s, perhaps running COBOL programming language,
mm-hmm.
and they're just not able to start giving out, start presenting the same superior borrower experience to their borrowers, right? Superior borrowing experience to their customers. And they would like to do that. So although it's unlikely that we would be able to displace their core processing engines, which is likes of, Fiserv and FIS or Jack Henry's of the world, but they have all the intentions to start adding a better borrowing experience as additional skin on their origination and underwriting side of things. And that's where we come in. So we learn from our alternate finance space, the use of traditional as well as non-traditional data sources in not only verifying the identity of a borrower, but also coming up with, automated underwriting models. And we are taking this, whatever we learned in alternate finance space, to the banks where even they are finding it interesting. Now, that's just one use case where banks are looking at our origination application with, some interest. There is another very interesting use case came out of the European market where banks are now subject to Basel III requirement, which has very stringent capital adequacy requirements where in effect, what's happening is they need to shed off some loans off of their balance sheet if they were to be compliant to Basel III. And one of the largest European banks is actually using our technology, actually specifically the CL Marketplace module, to build a private marketplace so that they don't have to shed out the entire loans from the balance sheet, but they could keep part of the loan and then sell off the let's say half or 75% of the loan to a close community of investors.
Interesting.
So what that will do for them is they get to keep the borrower relationship because they are the ones who's originating and they are the ones who are partially funding the loan and also eventually servicing it, but then exposing the remainder of the loan to their close community of investors by setting up a private marketplace. So that was, I thought, was a very interesting use case that came out of it. And it's not only one bank, but we have received interest from a couple of more European banks, and it's more prevalent in the Europe than in the US. So although we don't have data from like 100 banks who would all want to do this, but that's an interesting use case I thought I'll share.
Yeah, that's fascinating. So yeah, it's clear that you have a whole division that really is, or a whole, I guess, market that in some ways obviously is much bigger than the alternative finance market because, obviously that what's going on in Europe, but even what's going on in the US. You mentioned, borrower acquisition and how that's another thing that I think that this industry has really innovated on is, really getting, and you mentioned borrow experience, but having that be so fast. So having the turnaround be fast, and having the experience of the borrower be what, the 21st century consumer should expect. And, a lot of banks obviously struggle dramatically. I mean, that's why, huge, I had Noah Breslow on the show a few weeks ago, and, he talked about the deal with Chase. I mean, the largest bank in the country by, I don't know exactly what metric they use, but I think by assets or by revenue or something like that, the largest bank in the country cannot do this themselves. They need a company like OnDeck. So I imagine something like that bodes well for you guys, right? Because, I mean, obviously, Chase or Citi is not going to be a target market for you, but all of these smaller banks who want to do similar sort of thing to what Chase is doing, they can now use you guys in some ways to do some of that, right?
Oh yeah, definitely. I mean, incumbents have an interesting perspective on marketplace lending platforms. I mean, when I say incumbents, I really mean, either banks, traditional banks, as well as some tier one financial institutions. They, in the past, and we actually, even today, we see that they are wanting to partner with marketplace lending platform, really to leverage their technology advancements, really to leverage their big data algorithms, or just leverage the markets that they are in, the asset types that they serve, which perhaps traditionally they wouldn't go after, but they found a way to make loans to these markets through marketplace lending platforms. And that's why you're seeing more and more partnerships in this space. Although it is a good way to make yields as an investor and enter asset types where the incumbents haven't yet looked at, eventually what we believe is that they would want to leverage such next generation technology to retain their existing customer relations. In a partnership model, they are in a sense not really have control or access to the borrower relationships, and that's perhaps the most important thing any business would have, as the customer relationship.
Right.
And we do believe that soon enough, incumbents, including banks, will have to relook at their legacy technology infrastructure. And as we speak, they are doing that. Large banks such as Chase and Goldman Sachs, we are seeing that they want to set up online lending businesses. So it's a very interesting time for us. And I think you brought in a very good point early on, where you said if we had set up cloud lending solutions like 2 years ago, we would not have a viable business model. I'm a big believer that if you're setting up a business, you're going to do it at the right time. The product to market fit is probably the biggest driver towards a successful startup. And I feel that cloud lending's timing couldn't be better.
Yep, for sure. So then let's switch back to the alternative lenders, marketplace lenders. And I know many of them choose to remain anonymous, but can you give us a sense of how many platforms are actually using your software today?
Sure. We actually have over 80 lending companies using our cloud platform. Now, I typically put them in two buckets. One is established companies, which probably don't claim themselves to be fintech companies, and other bucket being fintech companies who either online balance sheet lenders or marketplace lending platform. I want to say we have a 55-45% split, with 45% being marketplace and online lending or online balance sheet lenders.
Right. Okay. And so I know on your website there are some of your clients who have agreed to have their names shared publicly. Could you take us through like one or two examples of a company that has implemented your technology?
Sure. I think one of our success stories is Harmony. They are a marketplace lending platform out of New Zealand. I think it will be interesting to speak about them. I call them one of our success stories in a sense that, we sort of delivered against our claims, which is to allow a new marketplace lending platform to focus on what's really important for them, which is really, in my experience, the borrower experience, their underwriting model, which is their secret sauce, and sort of leave the rest of the technology platform, which involves origination workflow, decision engine, bank relationships, fund movement, servicing, and collections to cloud lending.
Right. Yeah, I know the Harmony guys well. I'm sure that they've been, they've been one of the fastest growing platforms and have had a lot of early success. So they're a great. It sounds like a great client. So I imagine. So if you're someone's listening to this and they've just started, they're about to start a new lending platform, or they've taken over an existing one and they want to completely rejig the technology. there's obviously people have options. You can build it yourself. And I know you've done some, you've had white papers and things you've released on this, but, and what is the real advantages from going with someone like you than rather than getting something completely customized to your own needs and building it yourself?
Sure. I think I want to make one point very clear. And actually, this is true for all serious platforms out there who claim that they have built something from the scratch. And now, I think when a lending platform says that they have built all of it, what they typically mean is that they have purchased, best of breed software and built integrations and web skin on top of it. I'm sure that it's true for all the leading lending platforms out there, because that's how any serious lender would do. I mean, it's to make a point. Let me explain with an example. Mm-hmm. Now, all of them require a GL software, a general ledger software, to run their financial accounting and month-end reporting, year-end reporting. Now, that doesn't mean that they will build it from the scratch, because it doesn't create any value for their business, right? They will just go on and probably purchase Oracle Financials or SAP or something similar to do that. Mm-hmm. Now, same goes with certain aspects of lending platform. A serious and a smart platform would not want to spend their time and energy on writing algorithms how to calculate interest rate or drawing amortization schedule, because simply there is no value being created for the business if they were to spend their resources into doing that. I do believe that one of the reasons why Harmony has been so successful is because they know where they want to focus their energy to create value for their business. They're focusing their energy on their strategy of acquiring borrowers, the borrower experience, the customer experience, and their underwriting model. They are not focusing on, or rather, they are leaving all of that to cloud lending, which is, how do we service this loan, fund movement between banks, or collection. So all of that is being handled. Well, they are using our technology to handle these aspects. But there are other aspects which are probably more important for a business, and they want to do it in-house, which is their secret sauce.
Right.
Now, each one of, if I were to even go on further, so each one of these lending platforms would need a loan portfolio management software. Now, they could either go with an old software provider such as Fiserv, which was actually really meant for banks, or someone like Cloud Lending, which was built from the scratch, from ground up, by keeping in mind the requirements of next generation of lenders. It scores above legacy platforms such as Fiserv and Oracle when it comes to serving specifically online lending and marketplace platform community.
Mm-hmm. Okay, so let's just take that another step further. If someone has agreed to come on board, they want to be up and running quickly. That's a lot of people. They just want to implement it tomorrow. That'd be great. So what are the challenges? What are the biggest challenges for getting up and running quickly from the platform's perspective? Sure.
Just to reiterate, so we are not a white label marketplace lending platform. We actually enable marketplace lenders to use our technology to go to market faster by building their complete solution around our platform. Now, to answer to your question, I think it really depends on the maturity of the business model and the organization that we are dealing with. It really depends on the maturity of the organization. Now, in our experience, what we have seen is, let's say a garage-based startup by high-energy entrepreneurs with less domain experience, and if they want to build a fintech lending business, what we have seen again, this is my personal experience, which initially they will be of the view of let's build everything in-house, but typically the smart ones realize fairly quickly that and the aha moment comes to them that once when they figure out their business model, and it takes about a year of operation to reach that stage, at that stage they start to think about scaling their business and realize that they want to focus their energy on creating value for their business, and that doesn't include building a loan portfolio management system. So that's when they start spending their energy on refining their algorithm, underwriting algorithm, which data sources to use, and minimizing cost of customer acquisition, and to not really worry about loan portfolio management system. Now, on the other hand, if an established institution is to start a new line of business, an online lending platform, from the outset, they sort of know that they're going to evaluate best of breed lending technology to build their business around. Typically, they have figured out, their ideal customer profile, market segmentation, underwriting algorithm, or acquisition strategy. So, long story short, I think the clarity in the requirements and the business model perhaps poses the biggest challenge for any customer who want to get up and running quickly on cloud lending platform.
Yeah, I totally think that sounds reasonable. So I'm just curious now. You've got your banks, your alternative lenders, and these are obviously very different kinds of markets. How are you reaching these customers? How are you getting the word out about cloud lending so they know that you guys exist? Sure,
we continue to focus on alternate finance companies. I mean, that's our bread and butter, and we will continue to would like to maintain that lead that we have so far. Events such as Lendit helps us find prospects. I mean, that's like in one statement. This is the place where any player who is looking to start a marketplace platform, an investor looking to invest in marketplace lending. I mean, they cannot miss an event like Lendit. And there are few more events, and we do make a point that we have our presence felt in all those alternate finance events in the US and also abroad. Mm-hmm. And the fact that we have deployed over 20 active marketplace platforms already around the globe helps. We have gained significant domain expertise and sort of real on the ground insights, which our prospects find very valuable. Many a times we are their source for best practices in marketplace lending. Right. Well, I certainly appreciate the plug for Lendit there. We certainly aspire to help bring people together and meet folks like you. So I just want to be clear, like, where are you actually operating? I mean, you said around the globe, and Harmoney, you're in New Zealand. I know you mentioned Europe. I mean, are you a truly global company? Where are you? I guess, where do you have clients and where are you operating? Sure. In terms of geographies, we have strong presence in North America. 45% of our customers are in this belt, and then UK and ANZ region. Australia has been an exciting market for online lending. I mean, it's a small market, about 50 million people, but we are seeing a tremendous amount of interest in the ANZ region. But these are the three markets that we have strong presence in, and we continue to build on that. Right. Okay. So before I let you go, I want to talk about, you're in an interesting position here. I mean, you're the number one player in a new market. You've certainly got a lead on anybody else offering similar products. So what is your vision for cloud lending? Where do you want to take this? Sure. We are very aspirational. We are a dedicated bunch of team. Actually, we just crossed our 100th employee last week. Wow. Congratulations. We are 1 employee. So, well, in terms of vision, our 5-year vision is to build an open cloud platform for broader financial services. We do believe that it goes beyond just lending, including insurance, wealth management, personal investing and such. Now, although our focus is going to be lending for a foreseeable future, but our long-term vision is to make our platform available for third parties who are interested in building apps using whatever we learned and whatever common cloud services that we plan to expose as part of our platform solution soon. That will not happen until in the middle of next year, but that's what future holds for us. We are very excited about exposing our common services so that others can start using our platform to build applications for wider and broader financial services industry. Okay. So last question, I can't let you go without asking you about mobile. I mean, I feel like here you are, you're a tech company that's very much in the center of everything that's happening in our industry. And yet, mobile is still seems to be something that everyone is saying, oh, it's going to be in the future. I mean, there just isn't a whole lot of use cases out there. I mean, are you hearing some of your clients saying, we want to make sure that this is all mobile enabled, or even more than that? I mean, are they focusing on mobile as sort of a core way to run their software? I mean, what are you hearing on that front? Sure. I mean, that's a very interesting question, and I have an interesting answer to that. Okay. What we are seeing is the mobile use case is perhaps stronger in emerging economies. We do have some customers in Latin America, in some Southeast Asia, and the demographics is such, and they're at an interesting point where it seems like they have leapfrogged the desktop and the web, the desktop. Mm-hmm. they have more mobile penetration than desktop penetration in those geographies, and they are younger population. India is perhaps the youngest country in the world right now, with majority of population, actually 50% of them in the age of I want to say 20 to 40, and they are all very heavy mobile users. And these use cases are stronger in these markets where they want to enable everything for mobile, as against to, let's say, even in the US or UK and Australia for that matter. Although it looks very enticing that, okay, let's build everything for mobile, but from lending standpoint, we're still seeing that I think until and unless the millennials come into play, the mobile strategy is going to take a back seat in these three markets that I talked about, but not too distant. I mean, I think we're talking about 5-year time where they want to have mobile capability for everything. Now, not to say that we don't have any mobile capability within Cloud Lending platform. This is just API driven, and we have customers who have mobile interfaces, again, hooking onto the same API that a desktop version would. Mm-hmm. So from capability standpoint, it exists, but from adoption standpoint, you have my answer.
Okay, well, that's fascinating. I could explore that for another 30 minutes, but our time is up, I'm afraid. I really appreciate you coming on the show today, Snehal. It was fascinating.
Thank you, Peter, for having me.
Okay, see you later.
Bye.
So I'll just take up that last point that we were discussing, and that is about mobile. And while I totally get it that in this country it's really not as important, but when I was in China earlier this year, it was amazing to me that everybody uses their phone, and for a lot of them it's their only computer. They don't own a laptop, they don't own a desktop, and these are professional people. We're not talking about poor people who this is all they can afford. These are professional people. They choose to do business with their cell phones. So if you don't have a mobile phone app, you don't really have a company in China. That's particularly in this industry. I had conversations with people who would show me the apps on their phone, and they could do everything with that. They take out a loan. They could look at their investment portfolio. When it comes to peer-to-peer lending in China, that is what they use. They use their phone as their primary access point, be it a borrower or a lender. Now, we're not here yet in the West, but I agree with Snehal that we will probably be a few years away from that. But I also think it's definitely coming, and people who are not thinking about mobile now, I think, will be left behind. On that note, I would like to say thank you very much for listening. I sure do appreciate it, and I will catch you next time. Bye.